Do you really trust your bank in 2025? This year, 2 more U.S. banks failed, including a major one in Chicago. Customers were left scrambling for their money overnight. Parking all your wealth in a traditional bank account is one of the riskiest moves in today's volatile economy. While you think your savings are secure, they are being eroded by inflation. They are vulnerable to sudden regulatory shifts. And they earn interest rates so low, they barely cover the cost of a coffee. The financial system we rely on every day is quietly undermining us, with hidden fees, low yields, and constant exposure to market shocks. Today, I'm breaking down 7 smarter and more resilient assets. Assets that outperform simply stashing cash in a bank. Each one plays a unique role. Some shield your buying power from erosion. Others create steady passive income streams. And a couple might feel edgy, but they are quietly fueling fortunes for savvy investors. The final one is the most debated. But in 2025's landscape, it is gaining traction faster than ever. But first, drop a comment. Have you or a loved one faced a bank glitch, a freeze, or even a loss during recent turmoil? Like the 2023 SVB meltdown or this year's failures, your stories could warn others and spark real discussion. To set the stage, let's face the facts of our 2025 economy. U.S. inflation is hovering at around 2.8% annually. That means your idle money is shrinking in real value every month. The Fed's benchmark rates are still elevated, near 4.25%. Borrowing is costly, and growth remains sluggish. Even giant banks are under strain. Unrealized losses across the sector hit $500 billion earlier this year. It echoes fears of another SVB-style crisis, with stagflation risks looming, add in global tensions and potential tariff hikes. Your bank balance isn't just stagnant. It's fully at risk from systemic failures. That's why we're exploring these proven asset strategies. Strategies to safeguard and grow your wealth in a world where old-school saving can backfire. These aren't get-rich-quick schemes. They are practical alternatives for long-term security. Let's kick off with the bedrock of defensive investing, an option backed by the U.S. government itself, delivering yields that crush most bank savings rates. Asset 1, U.S. Treasury bonds, the ultimate safety net. Think of Treasury bonds as loaning money to Uncle Sam. He repays you with reliable interest, the default risk virtually non-existent, all thanks to government backing. In August 2025, 10-year treasuries are yielding about 4.26%, and 30-year options are hitting 4.88%. That's way better than the 0.5 to 1% from average savings accounts. If you're risk-averse and prefer stability over volatility, this is your go-to. Bonus: in uncertain times like the ongoing banking pressures, treasury bonds often rise in value. It's what investors call a flight to safety play. The catch: they are best for mid to long-term holds. Early sales might involve minor price fluctuations based on rates. Start small. Platforms like TreasuryDirect.gov let you invest from just $100. Or use apps like Robinhood or Schwab for easy access. For 2025, with Fed cuts on the horizon, locking in now could secure higher yields before they dip. If tangibility and income appeal more, shift to something you can physically own, an asset that fights inflation head-on. Asset 2, real estate, buildable wealth you can touch. They say land is the one thing they're not making more of. And in 2025's thawing market, it's proving true. Properties appreciate over time, they hedge against rising costs, and they generate rental income far superior to bank dormancy. Despite a slowdown in sales, with new home sales dipping about 4.9% year over year, prices are still climbing. The national average home value is up 0.3% to $368,581. Hotspots like Austin, Nashville, and emerging hubs in the Midwest have seen gains of 30 to 50% over the past 5 years, driven by remote work shifts and logistics booms. Not ready for full ownership? Dive in through REITs like Realty Income or Prologis. They offer dividends without the hassle of management. Drawbacks include upkeep and taxes, but smart picks in growing areas can minimize them. Apps like Fundrise make fractional investing accessible from just $10, turning real estate into a passive powerhouse for everyday folks. For timeless protection, when fiat currencies waver, turn to an asset central banks themselves hoard. Asset 3, gold. The eternal hedge. Gold isn't just shiny, it's a proven store of value amid chaos. Unchanged for millennia, while governments inflate away paper money, in 2025, prices have smashed past $3,400 per ounce. Fueled by geopolitical jitters and central bank buying sprees, gold is finite, it's durable, and it doesn't rely on dividends. Its real power lies in preserving wealth during downturns. Buy physical bars from trusted spots like AppMix. Or opt for ETFs like SPDR Gold Shares, ticker GLD, for storage-free convenience. Sure, gold doesn't generate income, and liquidity isn't instant. But as Charlie Munger noted, it's crisis insurance, the kind families turn to when fleeing turmoil, with U.S. reserves under scrutiny. Adding gold through apps like Vaulted could be your quiet shield. What if you want appreciation plus a dash of style? Enter assets that blend passion with profit. Asset 4, collectibles and luxury goods, hidden gems with flair. From vintage comics to trading cards, collectibles are outpacing stocks in 2025's nostalgia-driven market. A 1960s Ferrari 250 GTO sold for $70 million. And rare Pokemon cards have surged 300% in value over the past decade, beating many traditional investments. Trend spotlight coins, superhero memorabilia, and even vinyl records, all fueled by scarcity and cultural revivals. These assets aren't liquid like cash, but platforms like Masterworks or Rally let you buy fractional shares in art or watches, starting at just $100. If you're patient and tuned into communities like Reddit's r/collecting, this can elevate your portfolio with elegance. Pro tip: always focus on authenticated items. Use services like PSA for grading to avoid fakes. Sometimes, the simplest safeguard is the most overlooked, especially in a digital-dependent world. Asset 5. Physical cash reserves, instant access freedom. Not your app balance, but actual bills tucked in a home safe. In 2025's glitchy era, digital systems fail, ATMs empty, cards glitch, bank runs happen overnight. Think Lebanon's 2019 freezes, or this year's U.S. bank failures. Keeping 1 to 3 months of expenses in cash can be a lifesaver. That's about $2,000 to $5,000, according to experts like Sue Zorman. It's not for growth, it's for emergency autonomy. Store securely in a fireproof safe from Amazon, and rotate bills to avoid wear. In a cashless push, this old-school move keeps you independent. Why store when you can multiply? The next asset flips the script by putting your money to active work. Asset 6, your own side hustle or business. Self-made control. Forget passive parking, build something that generates revenue on autopilot. In 2025, with AI tools like ChatGPT helping startups, anyone can launch an online business. It could be an e-commerce store, a freelance gig, or even a content channel. A simple Etsy shop or Shopify dropshipping setup can yield returns of 50 to 200% monthly. That's far beyond bank interest. Stories abound. Sarah Blakely bootstrapped Spanx to billions with just $5,000. Everyday people turn hobbies into six-figure incomes through YouTube or apps. The risks: it takes effort and market savvy. But resources like Coursera's business courses make it feasible. Start small, monetize the skills you already have, then scale for true financial freedom. Finally, the wild card: reshaping finance. Digital assets that defy borders and inflation. Asset 7. Cryptocurrencies, the digital frontier. Controversial? Absolutely. But in 2025's bull run, Bitcoin has topped $111,000. ETFs from BlackRock are drawing in billions. It's scarce, capped at 21 million coins. It's borderless and it's inflation-proof, unlike endless fiat printing. If you had put just $100 into Bitcoin back in 2013, it would be worth over $1 million today. Trends are evolving fast. AI and crypto integrations, tokenization of real assets, even nations like El Salvador adopting it as currency. Yes, it's volatile. But firms like MicroStrategy are betting billions on it as digital gold. Start tiny on platforms like Coinbase or Binance. Focus on Bitcoin and Ethereum for more stability. With regulatory clarity emerging, even a 5 to 10% portfolio allocation could hedge against traditional cracks. So which of these 7 assets resonates most with your 2025 strategy? Rate this video's value on a scale of 1 to 10 in the comments. I read every single one and I use your input to tailor future content. Let's build smarter wealth together.